And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick here with Katie Greifeld, taking you through to that closing bell. It's a global simulcast. Carol Massar and Nora Melinda join us now. Tim Stenovec, I guess, has a well-deserved day off. Welcome to our audiences across all of our Bloomberg platforms, television, radio, and our partnership with YouTube. Another wild day on Wall Street. It looked like we were headed for a duality here of rallies in equity markets, but right now, the market's not hanging on.
No, not at all. And I mean, it all hinges often on what we're getting in terms of headlines out of the administration when it comes to this war. We saw that play out, certainly when it comes to the energy markets in a big way. Once again, volatility in that market, although crude, I should say right now, still down about 8.6%, but it was down as much as 20% on a headline by the Energy Secretary, Chris Wright, that was posted and then taken down.
What did he say? I'm sorry.
Well, it has to.
I missed it.
Did you miss it? It had to do with the U.S. Navy supposedly escorting an oil tanker through the Strait of Hormuz, and so
did that not happen?
Has not, apparently.
Caroline Leavitt at the White House press secretary said no.
Oh.
What's interesting, Carol, and I think you pointed this out in your conversation with Joe Matthew, that it was a very specific post in terms of the timeline that this had happened within the last 36 hours. So a lot of questions being asked, I'm sure, within the administration as well right now.
Right. And we've been hearing from a lot of our sources that we've been having guests on the show talking about the idea of just staying still in this portfolio and not making too many rapid changes based off of all the flying headlines we're seeing.
All right. Well, of course, geopolitics has been the main driver of this market for the last week or so. Potentially, that attention might actually shift back to the AI trade with Oracle earnings set to cross the wire in just a few minutes. Meanwhile, the closing bells in New York basically unchanged across the board for most of the major indices. The Dow Jones Industrial Average losing about 34 points, but that's only a drop of less than 0.1%. The S&P 500, which opened flat on the day, rallied about 0.7%, is going to close lower by about 14 points or 0.2%. The Nasdaq Composite is actually going to end in the green, but basically unchanged, higher by about 1 point on the day, and the Russell 2000 lower by about 6 points or 0.2%.
Yeah, and you definitely see the negative tone or sentiment in the trade today. Just look at, Katie, the S&P 500, 356 names losing ground today, 147, though, to the upside.
Also taking a look at the sector level breakdown as well, the mix you saw there. It's actually a perfect mirror of what we saw yesterday, just two sectors in the green, 9 in the red. In terms of what did manage to squeak out a gain, communication services higher by about 0.3%, tech to a little bit higher. In terms of what didn't perform, energy down about 1.3%, healthcare, utilities, industrials also on the back foot.
All right, let me get to some of the individual gainers. Vertex Pharmaceuticals closing up more than 8%, best day since December of 2023. Top performer in both the S&P and NASDAQ 100. The biotech company said its drug to treat a kidney disorder met its goal in a late-stage trial, providing a boost to its strategy of moving beyond cystic fibrosis treatments. RBC Capital Markets weighing in and said the positive data showed exactly what was necessary to confirm the drug's high potential and gets the company past their key unknown for 2026. He estimates the drug could eventually generate about $5 billion in sales if it can win approval in multiple conditions. Ciena, a top performer too in the S&P 500, that one gaining ground as well, up about 6%. It's a $48 billion market cap communications equipment company. A couple things at play. Analysts raising price targets for this one since the company reported earnings last week on March 5th. 12 analysts raising price targets by an average of 24%. Needham analyst Ryan Kuntz saying several networking and optical technology companies positioned to benefit from rising hyperscale cloud spending as AI infrastructure continues to expand, and he did identify Ciena along with a few other companies as a result. One more for you, Rivian rallying. TD Cowen coming out, upgrading the automaker to buy from hold. The analysts there positive on the stock's risk profile going into the launch of its R2 midsize SUV. That stock up more than 4%, Rivian that is. Price target to 20 from 17. Stock still down about 14% year to date. Nearly 16% of the float is short. And keep in mind, this one is still down 90% since a high back in November of 2021. But TD Cowen liking it, investors too, pushing it up about 4% today, guys.
Well, let's dig into some of the decliners on the day. We're looking at shares of Boeing down more than 3% at the closing bell. This is the biggest drop since November for the stock. This is after Boeing said that a wiring flaw found on its 737 MAX will delay some deliveries of the jet. This, of course, sending shares lower at the closing bell. The company said its overall delivery target of roughly 500 of the 737 jets for the year remains unchanged, despite the quality lapse. But clearly the street is not really liking this news. We know that the stock did rebound in 2025 year to date after having a pretty dismal 2024, down about 32%. But if we look at the activity for this year alone, it's up just about 1%. So it seems as though Boeing is really trying to vie to get a lot of its investors back on board here. Moving from there, let's go to West Pharmaceutical Services. This company has struggled this year. Today, we're seeing the stock down more than 5% for its worst day since February of 2025. The stock is down about 15% this year. But today, we're seeing it lower after the company said that long-term CEO Eric Green plans to retire, this marking the second recent exec change after announcing the hiring of a new CFO last year. So some of those management changes weighing on sentiment in the trade. Lastly, let's wrap things up with Centene. This is seeing its worst day since July of 2025. This company is about $18 billion in market cap, a healthcare managed care company based in St. Louis. We did see that shares were sinking. The company said it expects enrollment in the ACA marketplace to decline by about 35% or more across the industry after some federal ACA subsidies did expire. So not great news for the company. Shares down about 16% on the day.
All right, let's take a quick look at yields here. We did see a lot of volatility in that space, but the net effect is yields higher on the day. Your 10-year yield up for a sixth day in the past 7, up about 5 basis points. Your 2-year yield up for a fifth day in the past 7, up about 5 basis points. And the longer end of the curve, you don't have it up there. Oh, there it is. The 30-year yield saw the most activity there in terms of the sell-off, with pushing yields higher by about 7 basis points.
All right. Of course, we are awaiting Oracle's earnings, so just kind of glued to our Bloomberg. We'll bring you those results as soon as they cross. There we go. Stocks moving up. Romaine.
Oracle shares, Oracle earnings out, crossing the wire right now. 3Q adjusted revenue does appear to have beaten estimates. The company saying that it saw a 22% growth to about $17.19 billion. The street was looking for about $16.89 billion on a constant currency basis, up about 18%. Cloud revenue up 44% to $8.9 billion, and cloud application revenue up 11% to $4 billion, roughly in line with estimates. Software revenue also higher here off of those numbers. And still looking here, and here is your revenue guidance. The company says that for its total revenue guidance is now being boosted to about $90 billion. I need to take a closer look at that comparison here. And we need to dive in a little bit deeper into that CapEx number, which is going to be buried deeper into the release.
Yeah, still looking for CapEx, still looking for their cash flow as well. That was negative to the tune of about $10 billion last quarter. You can see shares, though, popping right now, higher by about 4%. But, Carol, it's important to note how low the bar was heading into these earnings. Their last high was on September 10th, and through today's close, down more than 50% since then.
Yeah, interesting to see. I was just kind of going through the press release looking for a little bit more in terms of capital expenditures. But what's interesting is you are seeing this stock up about 4% here in the aftermarket. So investors at least initially liking what they got here, Nora.
Right. And it seems as though, Oracle needed this win. As Katie was saying earlier, the bar was pretty low, but I mean, investors will really be focused, as I was hearing from some of my sources, on the cloud business, and that's specifically how quickly Oracle can turn major bookings from customers like OpenAI into actual revenue.
Yeah, and there was a lot of discussion here coming into this. I mean, remember, we had seen reports by Bloomberg about the company scaling back in terms of headcount, scaling back in terms of some of its spending plans with regards to that Stargate center down there in Texas. And the idea that coming into this report, investors really wanted to see what that CapEx number could be or would be, and whether they would raise it or maybe even curtail it. We are now starting to get a little bit of a trickle here about the forecast. The company saying that for the current quarter, the fiscal fourth quarter, it expects revenue to grow from 18% to 20% on a constant currency basis. The company they're guiding, so I guess slightly higher than what the street was looking for.
Yeah, absolutely. That revenue guidance, too, again, up to $90 billion, certainly catching the attention of the after-hours trade. It's going to be interesting, too, to see how this is reflected when it comes to the debt markets. Obviously, very much in focus when it comes to Oracle. Heading into this report, you consider that when it comes to their 5-year CDS at the highest level since January 2009.
All right, so I just want to go back here to those numbers here, just diving through the release. The company says that for the full fiscal year, which basically ends this quarter, they're expecting capital expenditures of about $50 billion. That's unchanged from its previous guidance. For the fiscal 2027, the company says it is raising its total revenue guidance to that $90 billion number, but it is not, at least not in the press release, providing a CapEx figure. So maybe we have to wait for that until the conference call.
Yeah, it sounds like that's going to be something that's certainly going to be asked about. But again, we continue to see this stock now up about 7% here in the aftermarket. So we're definitely seeing a pop to the upside.